GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. So we've seen some pretty interesting moves in Bitcoin over the weekend. Hit 60,000 for the first time. Also had the Dow Jones Industrial Average hitting record highs several times last week. Also had a record high in the S&P 500, which we'll look at today. A bit more choppy in the dollar, a bit less conclusive. But of course, this week we have the Federal Reserve interest rate meeting, so that should be important for the next direction of the dollar. We'll talk about all of that today. If there's anything extra you'd like us to cover beyond these set of main products, please drop a comment in the video. We'll be happy to cover those. And otherwise, just click that like button if you're getting some valuable content. Okay, so let's have a look at the euro. So we obviously have been in a pretty sharp correction in the euro, and only just of late we've started to see a bit more of a kind of positive force. So if we remind ourselves of the bigger picture, here's our daily chart where we rallied strongly from October through to December, and we've been correcting since. Potentially ABC and potentially done. You can see that we've basically we've come back, roughly to this high here, but sort of through this kind of cluster of highs, this high, this high, this high, through here. We've basically found support in that zone and rallied up a bit and potentially come back through this old area of support and old resistance here, and just stalling out a bit ahead of 120. So the euro trying to find a base at the moment, and you can see that actually it had that initial rally up, dropped back, and then rallied up again. So we had a break of a high, so a new higher high, and at the moment we've put in a higher low as well. So there was 1, 2, and a third higher low, and you can see that we've just struggled back at that same old long-term resistance, broke above it, dropped down to the old high, and then struggled a bit here. So if we do give way at basically 119, 119.15 down to 119 and change, then you can say that probably this downtrend is resuming again. So you can see here, for example, we had a big drop down and we rallied up, and then you can see here was where people started trying to buy a retracement, but it didn't go anywhere. It fizzled out and we dropped down and made fresh lows, came right down, tried to buy up a bit here, nothing happened. And you can see this is the first time something's really happened for a while, but it doesn't, just because buyers managed to push it up this high, this far, doesn't mean that we're suddenly in for an uptrend. Just one higher high is not enough. What we need is for this high to get taken out as well and push up more through 120. Then we can feel a lot more confident that actually some sort of new uptrend is materializing. So let's see what happens at this little swing point here. For the moment, if you're trading in line with the trend, you'd assume that probably it's going to take out the lows, but you don't have to assume. You just wait for it to happen and then try and trade back at the level down to these lows here. If it does hold, again, we're just looking for a push through 1980, then 120 is the round number to tell us we're back in business. Look at the pound next. Similar sort of picture. So we're in a long-term uptrend here in the pound, and we made a little short low through there, rallied up, but we can see we pulled back down to that little low. It was just below 138. We were looking at previously, we were looking at these highs through here and the rising trend line as potential support. That could still happen, but it looks like this little low through here has worked. We could get another drop to the level, and that probably would correspond to the rising trend line at that point. But the trend line is just a guideline, just tells us the overall direction of the trend. It's sort of you can draw it in different ways through through the lows or through the closes, just generally telling us that we're in an uptrend. And for now we're kind of correcting just the same way we are in the euro. So bigger picture is up, but the short term we're kind of correcting, so we're trending lower on the short term. And again, a bit like the euro, we came down to, so do you remember, I don't know if you remember last week, we talked about a pretty picturesque trade of trading 138 sorry, trading 140 down to 138. Well, basically last week we just had the opposite trade again, buying down at 138 and then trading it straight back to 140 again. So a neat 400 pips if you're able to take that. Now we're in the middle of the range at 139 and change. And you can see basically what's happened here is we took out the high and we more or less held on to the high, rallied up, made a new higher high. So one higher high, pulled back, the low corresponded with the old high, higher high again, and then this time we weren't able to hold on to the onto the high, and you can see that we dropped right back down to that old high again, and we rallied up. So still actually quite positive in the short term. That was a bit more hardcore selling came in there, but we did bounce quite neatly and we're back above 139. You can see we're kind of rebounding off 139 for now. So eyeing up, taking out 140. So just like 120 in the euro, it's even more clear cut that 140 is the big level in sterling now that we need to push up above. So we can see here's our big long-term trend stretching all the way from down there. We corrected, and you can see that now we've basically formed a ceiling to this corrective pattern. And so if we get a breakout through there, that's pretty much the correction over, and you can expect higher highs and a move up beyond this peak here and probably up to 143. So it sort of feels like that's what's going to happen. So some people are picking their spot at 139. You could take a more conservative approach and wait for another drop down to the lows at 138 to really give you a solid risk reward, 138 to 140 again. But it sort of feels like that's already happened. We did the 140 down to 138. We've done the 138 up to 140. Now we've dropped down to 139 in a bit. It seems like people are buying in now more at 139, expecting 141 and maybe higher. Okay, moving on to dollar yen. So we're talking about the potential for a break higher in the euro and the pound. So that obviously implies dollar weakness, and the ultimate place for dollar strength of late has been dollar yen. So if it is more of a kind of dollar move that drives the euro and the pound, then you'd expect dollar yen to kind of top out. And we have just hit 109, and this move has just been so explosive. And it's just been perfectly matching the Fibonacci that we talked about all the way up. Touch, and then we've just got the 76.2 left, and it's this peak up here. But the price already starting to stall out a little bit, but it did come out and take out the high again. And we've got 110 just above this old high, which is basically where it failed to get to the last time. You would imagine 110 would have been a target for a lot of people, but given that we've come almost in a straight line from 105, 400 pips higher, maybe 110 is a bit much to ask for, although it does also correspond with our big long-term downward sloping trend line. But it depends how you draw that line. If you drew it through the first high there, then actually we're kind of bumping into it already. If you see there kind of false breaks, we're here, you can sort of see why the price is stalling out. Such high momentum, potentially a long-term kind of pattern coming on. I'm taking a slightly more conservative approach, putting it through that last high. But you can see we're in the kind of region of where dollar yen might top out, and that sort of supports our strong euro, strong pound position. If indeed that plays out. So here we are on the short-term chart. Not really much evidence of a top yet, but potentially if the price fails here, or ideally even a bit higher and drops down again, got something along the lines of a double top pattern, but not really much. I mean, this has not been a very deep correction so far. But if you do expect dollar yen to pull back, obviously it's going to be the best risk reward at the moment because we're right at the highs, but the obvious risk to that is that we are still in a pretty powerful uptrend. So maybe pick your spots. If you are going to sell at the highs, try and sell into some strength. So if we do go rallying up through that 76.2 level, charging toward those highs, I mean, it'd be fairly clear cut where the trade goes wrong. If we're above this high, if we're above 110, that would be a bit tricky for going short. I mean, I think somewhere between now and just above 110, we're going to get that it's somewhere in that region. Is going to be where this currency pair tops out. So we're close to a top. So it depends how accurate you want to be here, but I'd be reluctant to be buying into this trend anymore. More like if I was already buying, selling some of what I bought, and then looking towards going short. Okay, so now we're into WTI, and the reason I had this moving average on there, which I don't always try to do, but it's been such a strong uptrend with no real clear trend line on this occasion. Actually, you can see what the price has been doing is pretty well respecting the 20-day moving average. Pretty much every time the price has tested the moving average, it's been a place for the price to move higher again. So I'm just leaving that on the chart for now, because it's not that it always works. I mean, you can see here in choppy sideways periods, you don't really want the moving average on there. It's pretty useless. But on this occasion, it's serving a purpose, and it's not like I'm going to go super short oil when the price drops below the trend line. But if we do see one or two daily closes below the 20-day moving average, I'll have a pretty good idea that this powerful uptrend is over, and we're probably moving in towards more like either just a correction of the uptrend or a sideways period, or less likely a very strong downtrend. But and then bearing in mind, we've just come into our big level up here. So we had a bit of a, actually it's like a gravestone doji-ish. It's not a doji, but it's a sort of hanging man type reversal at the top here. Long bottom wick, shortish body, and small little wick on the top. I suppose closest to a hanging man. It's not strictly speaking any bearish pattern, but it does look a bit bearish by itself, hanging at the top there. And if you had another bearish week after that, that would pretty much be a decently completed top pattern. Now, got to be careful, because we had this pattern which was very neat at 160. And I talked about it at the time as potential reason to get bearish, but you can see it never took out the low of that week, and it just carried on going. So let's kind of play by the same rules on this one. It looks a bit bearish, and it could be a good opportunity right at the high here, but the market is very strong. So we could look for the 20-day moving average as a kind of reason, as a confirmation that we've got the top up here. So you either play near the highs as normal, or you wait for that confirmation move lower, having held that resistance. Okay, let's have a look at gold. Kind of interesting in gold. So we had the big drop down to 1700. This is our weekly chart. What I've done now is I've actually, recently I've been talking about the Fibonacci levels here, and this is still kind of relevant, because we're basically bouncing off the 61.8 level at the moment. But what I've done is just to think, in case this isn't the low here, what actually could we be working with? And you can see that actually, if we, not from the very low down here, but if we work from that low, which is, say the price has been going pretty sideways for a while, and sideways for quite a period to the left here as well. It was really when we put in this low and then exploded to the upside. This is when this big long-term uptrend in gold really started in May 2019. So just using that as the low, you can see that worked pretty neatly as the 31.8, and it also works quite neatly if we get a little bit of a move lower, but already the 50 level working. So it's making me think that if we do leg lower again below 1700 substantially, maybe we're coming down to the 61.8 level through here, which is not any particular round number, but it's around 1550, which is also kind of these highs to here. So this kind of zone could be a target area for the bears if we do extend lower again, which we don't necessarily have to. We do remember we had that kind of daily death cross, which tends to mean quite a soft price for a few weeks after. But all that said, we have hit 1700, which maybe have been a short covering target for the bears. It may have been a level to start buying in for some long-term players. We obviously have come right down from 2060 or whatever the high was, right down to 1700. And now on this 4-hour chart, you can see that you're making lower highs, lower lows, lower highs, and then finally we made a higher high up here, and we banged into that previous high here, rolled back, hit 1700, and there was some buying in at 1700. So again, a bit like the euro also, and the pound, we've had a drop, and we're just seeing if there's a base happening here. And I think the clearest cut pattern would be if the price did break out through here, then obviously we would be buying about high up there. But if we got a if we saw something like this, this to me I think would be a good opportunity. Inside here, a little bit hard to tell what's going on. You could sell at the top of the range on a short-term basis. You could buy near the bottom on a short-term basis. But if we're trying to pick a direction here for some, for some potentially stronger moves, we kind of want to see a breakout one way or the other first. So that would be what an upside breakout would look like, and obviously there's the possibility that we break down and target that long-term fib level that I already talked about. Right, jumping over to silver, this daily price chart looks a bit like a mess, but we can garner a little bit of, if you try and ignore the noise a little bit, what you can see is that, okay, let me pull out of it. So we had the big rally up, dropped back, made a low here at around 122, held 122 again, rallied up, held on to 24. So we were holding on to 22. Now we're holding on to 24, rallied up again, came right back, and now we're holding on to 25. So you could sort of see that we've gone from 22 to 24 to 25 in terms of the lows that are holding. So there's a whole lot of chop in the meantime, but actually we seem to be making higher lows here. The highs have not always been a higher high, so that's what gives us the chop. But actually there does seem to be like buyers are getting kind of gradually more optimistic, gradually more aggressive. And then again, if we drop down to our 4-hour chart, we can see there's the buying at 125. We rallied up through 126, but stalled ahead of 126.50, dropped back to the low here, and now people are trying to get through, up through 26 again. So I think, if you think this 25 is the bottom here, maybe then 26 is the next level to hold, then you would expect another attempt to run higher, maybe up towards 128 again. So 126 to 28, with 25 being the risk area. That's a potential opportunity if silver's got another run higher in it. Moving over to the stock market here, so we did, let's just look on the daily chart first. You can see that long extended uptrend obviously, and we just about nudged a record high last week and basically made a matching matching high on the chart. I think it was a new record intraday high. It might have been a new closing high on the cash level, and the rising trend line that we talked about worked pretty neatly. We had that kind of what we said was a something close to a kind of two matching lows here and a higher close. So that's generally a positive candlestick pattern here, and we've just pretty much rallied up since, tested the high. Now if you think we're going to see a double top, now is obviously the perfect time to sell. But to me, this longer term trend uptrend is still intact, and we've got that big 4,000 level just above. So it seems at this point, if we've survived this bond market concern wobble and rallied up last week, surely we can tag 4,000 for the first time. Is my logic. And then if we are looking for a slightly better price to buy into, potentially instead of thinking about this as being a massive long-term double top, what we could think about is this and this as being potentially a short-term double top. So if we did take out this low here, then you could see, you could easily see people buying in. You can see I'm using this rally from this low and using the Fibonacci levels. So you could see that people would just buy straight in at these old highs, the 38. They could buy it at the 50 with this little spike high here. Or if we're just talking about a kind of a matching move, it could take us down to kind of roughly into this zone, maybe a bit above the 61.8 level in terms of if that is a double top, little match move lower into around there, and there's 38.50, which is a little bit lower. So if we did think we had some hope of a correction happening, so we've had a good rally. If we just use a standard Fibonacci as a place to buy into a correction, use the potential short-term pattern here, well, that would line up to something in this area. Otherwise, a very likely scenario is that we've already had a correction here, we just break out to the top side. But just thinking in terms of opportunities to buy into a deeper dip, rather than very short-term kind of 1 hour based trading breaking up through the highs. Now, last but not least, I did mention at the start that Bitcoin hit 60,000 for the first time. Now, we've had a bit of a pullback since then at the start of the trading week. I've drawn a similar idea with the S&P 500. We've had a good rally, and just assuming this is a short-term top, just going off the idea that maybe the Fibonacci provides a level on the way down, and it matches pretty perfectly with the lows. So look, 38.2% Fibonacci retracement. If we go a little bit further, it would match that low. If we had a 50%, it would match these lows through here. If we had a 61.8, it would match perfectly 51,500, which was basically the base that we broke out before hitting this last rally. And I think we talked about that base as it was last week before this big breakout. So some pretty clear cut, I think, spots to try and pick up Bitcoin if there is a deeper correction. If being the optimal word, it may just keep pushing higher. Right, I'm going to call it a day there. Thank you very much for watching, everyone. Good luck trading this week. Make sure to subscribe so you don't miss this video next week. Thank you. Bye.